The naira strengthened and Nigerian treasury bills and bond yields rose between 30 and 50 basis points today as the market reacted to the surprising tightening announced at the July monetary policy meeting. I'm now joined by Nwabeze Okone, a currency trader at UBA, to analyze the market's reaction. Eze, thank you for joining us. Of course, we have to start with the naira. So I think a lot of people are getting a bit concerned about what will be the new normal for the naira. I think all that has been thrown away for now. A lot of people calling 161 as the new normal, but now we're seeing the naira strengthening today to 159.90. Talk us through the dynamics at play today.
$164 for most of the sessions for the past two months. I mean, that's really given a lot of concerns to say that the new normal should be between 160 and 161. It's a bit. I mean, I guess some school of thought still remains that the CBN would do something, would do some form of activity or some action to be able to contain naira weakness. I mean, we've seen them coming with tightening. They've outlined the reason why they actually did those tightening. Albeit maybe most people wouldn't have considered it from that angle, but they did it nonetheless. And as a result, you've seen the currency gain appreciably on the back of that. It's a normal, simple economic theory. Strong tightening tends to push some strength into the currency.
Is this sustainable in your view, though? Do you think naira is going to stay below 160 for now?
If I overall get a sense of what the CBN action would be in terms of on the currency, I think they would prefer a stable currency. I think they will want a currency that is within the plus or minus 3% band, and I think that they would ensure that that happens. So overall, the pressure still exists, but I think for now we're seeing the currency on the strengthening path.
But what about the demand-supply dynamics? What does this mean for that? Because today, like we have seen, perhaps demand has weakened a little bit because of the decision. So what do you think going forward is likely to be that dynamic?
I mean, on the demand front, various factors come into play, but one factor that would easily not be so much active in the market is the idea of using naira as a carry for dollar transactions. With the tightening in the market now, naira as a carry doesn't sound attractive. And interestingly, though, I mean, a few comments, a few talk here and there shows that the offshore guys are looking at what's happening, right, and we might begin to see some form of demand from that window while they try to get things sorted out, okay, a clearer picture of why and how the whole process works. But it's a combination of various plays, so we might see those supply coming again. But overall, I still think that demand and supply, one aspect of the demand is obviously going to win, as in using naira as a carry. That's going to win. That obviously is going to ease off some of the pressure, and as a result, you might see some sustenance on the levels the naira is trading. Too early to make a call, but overall, that's what I think about the currency for now.
While we're discussing this point, maybe it's important to clarify exactly when this kicks in, this whole idea of the 50% cash reserve ratio for public deposits. I noted that in the communique of the MPC, there wasn't a specific date, and I think usually they would communicate that. When can we anticipate that we will see the actual transfer of this 50% reserves to the central bank?
Really rightly said, these things will be communicated typically if no clear statement is made as per when the effective days of all these new policy changes made. We expect communication sooner than later. I would look at it, I would want to be prepared along the typical cycle of cash reserve requirement activity or cash reserve requirement postings into the system or out of the system. I mean, it's typically done at the end of the month, and all things being equal, right, I would expect that it might just be effective at the end of this month, but I'll wait to see. Right. All well and good. I'm sure we'll get some clarity in a very quick manner.
We certainly would. Okay, let's move on to the fixed income market. We've seen volatility there as well. the yields up between 30 and 50 basis points. Can you just talk us through the activity we're seeing? And you just mentioned foreign investors. At some point, I imagine that they will find this yield a lot more attractive.
I reckon that if the yields get to the 14 levels, they obviously will find it attractive, because even when the yields hit the high 13s and the 14 levels without any much ado, nothing has changed in the international space, nothing has majorly changed in the Nigerian space. The factors still remain there. So really, I think if it gets there, they'll find it attractive. But I mean, I think if you look at the trading in the fixed income market, especially in the longer end of the market actually did weather the news from the MPC's decision very well. Trading went on smoothly. There was no halt in activities. We saw prices being given across the benchmark bonds. Even though we saw the movement, but it wasn't as though that there was a halt in activity or people were very erratic in quoting and stuff like that. Right. I mean, that's a very big plus for me on the fixed income market after such a shocker in quote that would have come out of the MPC.
I need to wrap this up now, but very quick point. Yes or no? Do you think we're going to see higher yields?
I reckon we'll see higher yield, but not so high yields.
We'll see.